So here's the balance sheet, and we're going to take a look at this. First thing that someone looks at who knows anything about accounting, they're going to take a look at the assets and the total assets, as well as the liabilities and owner's equity. They're going to make sure that the assets equal the total liabilities plus owner's equity. So when we take a look here at the total current assets, we have $510,624.86, as well as total liabilities and owner's equity of the same. So that's good. The figures themselves, looks like you have fixed assets, accumulated depreciation, so on and so forth. That's fine. Now your description of the balance sheet, again, reads a little bit like a commercial. We need to make it sound a little more business-like, especially because this is the financial section of the plan. So based on the above balance sheet, Picket Sweets and Treats will start the year off in the green. I mean, I guess that's a statement that you could use, or you could say, you know, with a surplus of cash on hand. Throughout the year, cash will be spent paying for various expenses, insurance, and insurance is an expense. Cash will be spent on various expenses and other investments, and therefore sales from our sales throughout the year will be needed to maintain a highly profitable, cash-rich organization. Large increase in sales, a large increase in cash, or a large influx of cash will come from our November trade fair, as well as our sales that we make throughout the year. Based on our sales projections, we expect to have, upwards of $575,000 in cash by the end of business 2016. Something along those lines would be a good explanation of what's on the balance sheet. You can also point out the fact that, our balance sheet, as it stands, has an equal amount of assets, assets and liabilities with owner's equity, just to show that you know what you're doing as well. But yeah, that's about it. Pretty good balance sheet and a good explanation. The loan amortization, I want to touch on this now as well. If my computer wouldn't freeze, there we go. Again, we're not requesting a loan. You could show the loan amortization schedule that we would be paying out if we got the loan from last year. But for the most part, I would just use this to describe the loan that we requested last year. But then I would put something in writing that kind of speaks to the fact that the $30,000 investment would be contributed toward specific costs for specific advertisement campaigns, such as the billboards and commercials. That's something that I would focus on below this loan amortization table and before the income statement, because obviously the advertisement is something that's going to contribute to our income. We take a look at the income statement. Picket Sweets and Treats. This isn't a bad opening. Entering our second year as a business, Picket Sweets and Treats hopes to have a productive start in late September or early October. Our trade fair preparation is something that will help drive our sales and will make a large influx of cash in the month of November. So when we take a look at trade fair revenues of $100,000, that number there is incongruous with the $70,000 that you spoke about earlier. So again, we want to try and come up with a consistent number that we can touch upon. Contract sales to non-VE entities. We do have money coming in on a $10,000 monthly basis. Where this $375,000 in September comes from, I don't know. I think that's the figure that we had from last year. So you need to make an amendment here to the income statement. You can't just use the same one from last year. Other than trade fair revenues, okay, that's fine. And then your operating expenses look to be pretty consistent and accurate. Your income from operations, obviously negative in some months, but truthfully, you do have to pay rent and other things and salary. Well, you don't have to pay salaries in the summertime, but you should include some rent over the summertime, just to make it somewhat consistent. Most income receivable come from our contracts secured, yes. Annual trade fair, good. The rest of the productive year, we expect to have constant cash flow based on the fact, or because statistics show that everyone loves candy. That's good that we're data driven with our expectations. We predict that sales will decrease around late April and May due to school ending differently around the country and the world. That's good. Most of our expenses were one-time expenses. Most of our expenses last year were, I'd look to reword that. We expect to end with a net income of X. With our business doing well last year and not having many expenses, we plan to break even by the end of this fiscal year because of fewer expenses, which will increase our revenue. True. Yes, and they do pay 7% sales tax. The income statement and its explanation is not terrible. But again, there's just a couple things we can reword and again be a little bit more specific, and we'll have a really good, financial section here. All right, that's the financials.